Imagine investing just $100 back in 1988 and watching it explode into nearly $4.2 million today. Picture a fund that outperformed the S&P 500 by an astonishing 250 times. This isn't science fiction. It's the story of the Medallion Fund, the crown jewel of Renaissance technologies, and the man behind it all, Jim Simons. In the next 15 minutes, we'll uncover how a mathematician turned hedge fund wizard built one of the most secretive and successful investment machines in history.
There's something called the efficient market theory, which says that there's nothing in the data, let's say price data, which will indicate anything about the future, because the price is sort of always right. The price is always right in some sense. But that's just not true. So there are anomalies in the data, even in the price history data. For one thing, commodities especially used to trend, not dramatically trend, but trend. So if you could get the trend right, you'd bet on the trend, and you'd make money more often than you wouldn't, whether it was going down or going up. That was an anomaly in the data, but gradually we found more and more and more and more anomalies. None of them is so overwhelming that you're going to clean up on a particular anomaly, because if they were, other people would have seen them. So they have to be subtle things. And you put together a collection of these subtle anomalies, and you begin to get something that will predict pretty well.
Jim Simons wasn't always trading billions on Wall Street. Before his name became synonymous with unparalleled returns, he was a brilliant mathematician and a respected professor. As the head of the mathematics department at Stony Brook University, Simons mentored some of the brightest minds in academia, but his ambitions stretched far beyond the classroom. In 1978, Simons took a daring leap from the realm of pure mathematics into the chaotic world of financial markets by founding Renaissance Technologies, a firm that would soon revolutionize investing.
But are these giant beasts of equations and algorithms, or are they simple things?
Well, the system, as it is today, is extraordinarily elaborate, but it's not a whole lot of, it's what's called machine learning. So you find things that are predictive. You might guess, oh, such and such should be predictive, might be predictive, and you test it out in the computer, and maybe it isn't, maybe it isn't. You test it out on long-term historical data and price data and other things, and then you add to the system this if it works, and if it doesn't, you throw it out. So there aren't elaborate equations, at least not for the prediction part. But the prediction part is not the only part. You have to know what your costs are when you trade. You're going to move the market when you trade. Now, the average person will buy 200 shares of something, and he's not going to move the market at all because it's too small. But if you want to buy 200,000 shares, you're going to push the price. How much are you going to push the price? How are you going to, are you going to push it so far that you can't make any money because you've distorted things so much? So you have to understand costs, and that's something that's important. And then you have to understand how to minimize the volatility of the whole assembly of positions that you have, and be so you have to do that. That last part takes some fairly sophisticated applied mathematics.
In 1988, along with key collaborators like former colleague James Axe, Simons launched the Medallion Fund. The fund was not an immediate runaway success. In fact, its first year netted a modest 9% return, underperforming the S&P 500, which soared above 16%. The second year was even tougher, with the fund incurring a 4% loss while the market surged by over 30%.
I'd walk in one day, everything was going my way. Oh, I'm a genius. The next day I'd walk in, everything was against me. Oh, I'm a dope. It was a very stomach-wrenching business. Whereas with a system that you can develop, okay, you have a system. You do what the computer says to do. you have made a historical study of the system that you're using, and it worked with a very high probability this system was going to work. And so I was much more satisfied with that approach. And we hired scientists and so on and to build these. Whereas
Pressure was mounting, and internal tensions threatened to derail this innovative venture. Yet failure was only the precursor to an extraordinary transformation. Simons enlisted the help of game theorist Elwyn Berlekamp to overhaul the fund's trading system from the ground up. By 1990, the Medallion Fund had rebounded with a staggering 55% net return. This was just the beginning of a journey that would rewrite the rules of hedge fund performance. What set Medallion apart wasn't some insider tip or a stroke of luck. It was the relentless pursuit of patterns buried deep within mountains of data. While many investors relied on gut instinct and conventional research, Simons and his team of mathematicians and scientists embraced advanced algorithms and statistical models. Their strategy was to identify and exploit tiny, fleeting patterns in market behavior, turning countless small profits into astronomical overall gains. The numbers tell a story almost too incredible to believe. Between 1988 and 2021, the Medallion Fund achieved annualized returns of 62% before fees and 37% after fees. To put that into perspective, while a single dollar invested in the Medallion Fund would have ballooned to nearly $42,000, the same dollar in the S&P 500 would have only grown to about $40. Even Warren Buffett's Berkshire Hathaway, often considered one of the best investments ever made, would have turned that dollar into just $152 over the same period. Yet the Medallion Fund's triumph isn't just in these jaw-dropping figures, it's also in its consistency. Out of more than 3 decades, the fund has lost money in only 1 year, 1989, and its returns have even been partially negatively correlated with the broader market. When the S&P 500 plunged 37% in 2008, the Medallion Fund surged by an astounding 82% net of fees. It gets even more fascinating when you examine the fund's fee structure. While most hedge funds follow the 2 and 20 model, charging a 2% management fee plus 20% of any profits, Renaissance charged fees of 5% and 44% respectively. At first glance, this might seem exorbitant, but the fund's performance justified every penny. In fact, if you imagine investing $1 million in 1988, by 1997, the investors would have seen their capital grow to $15.8 million, while Simons himself would have accumulated nearly that same amount, starting from zero. A thought experiment even suggests that the Medallion Fund could have charged a 40% management fee and still outperformed the S&P 500 over a span of years. Incredibly, the model suggests that even a maximum fee of 49% annually wouldn't have diminished its supremacy over the market by 2021. This absurdity underscores just how extraordinary the fund's performance has been. Despite its monumental success, the Medallion Fund remains shrouded in mystery. The inner workings of its trading algorithms are closely guarded secrets, known only to a select few within Renaissance technologies. This secrecy isn't just about protecting trade secrets. It's a vital part of preserving the competitive edge that has allowed the fund to thrive for decades.
But I can't get into, what things we do use and what things we don't use. We reach for different things that might be effective. So we're very universal. We don't have any, but it's a big computer model. For one thing, there is a capacity to the major model. It can manage a certain amount of money, which is rather large, but it can't manage an enormous amount of money because you're going to end up pushing the market around too much. So there's kind of a sweet spot as to how much it's reasonable to manage. Therefore, it would never grow into some behemoth which would, take everybody out and you'd be the only player. Of course, if you were the only player, there'd be no one to play against.
The Medallion Fund strategy is a far cry from traditional investing. The team's focus on statistical models, computer algorithms, and data analysis was revolutionary at the time, and it has since become the standard in quantitative trading. Yet even as many hedge funds have attempted to replicate its methods, none have come close to achieving the same level of consistent success. Beyond the numbers and the algorithms lies the legacy of Jim Simons himself. A man whose curiosity and intellect propelled him from academia to the forefront of modern finance, Simons' approach has forever changed how the world views investing. His insistence on rigorous data analysis, his willingness to challenge conventional wisdom, and his relentless drive for improvement have inspired a generation of quantitative analysts and traders. Despite his near-mythical returns, Simons has always maintained a focus on discovery and innovation. His journey from a mathematics professor to the mastermind behind one of the most successful hedge funds ever created teaches us that sometimes the most unconventional paths lead to the most extraordinary outcomes. For those of us watching from the outside, one lingering question remains. Can you invest in the Medallion Fund? The answer is, unfortunately, no. Since 1993, the fund has been closed to outside investors, with all its profits and capital now owned exclusively by Jim Simons and his team. While this exclusivity only adds to its mystique, it also means that for most of us, the Medallion Fund is a benchmark, a legend in the annals of finance, rather than an opportunity available to every investor. So what can we learn from the extraordinary saga of the Medallion Fund and Jim Simons? First, it's a vivid demonstration of the power of data and the transformative potential of technology in the world of investing. By challenging the status quo and embracing a rigorous, scientific approach to market analysis, Simons and his team turned modest beginnings into a veritable financial juggernaut. Second, the story of the Medallion Fund is a reminder that success often requires persistence in the face of early setbacks. The initial rocky years of the fund could have spelled its end, but through innovation and an unyielding commitment to improvement, it not only survived but thrived, achieving returns that seem almost too good to be true. Lastly, Jim Simons' journey underscores an important point. There's more to life than money. Despite the billions he has earned and the headlines he has made, Simons remains a testament to the idea that passion for one's work and a relentless quest for knowledge can lead to achievements that go far beyond financial gain.
The penultimate principle is don't give up. Now, sometimes discretion is the better part of valor, and you can just say the hell with it, but and go on to something else, and that's a decision that we've all made at one time or another. But persistence has a lot of value, and something that's really worthwhile can take a lot of time to come to fruition, and you ought to have patience if you believe in something to stick with it.
Despite making billions on the stock market, Jim gave most of his money away before he died in May 2024. One of his biggest charitable efforts was the Flatiron Institute. This center uses powerful computational methods to push forward research in math, quantum physics, biology, astrophysics, and neuroscience. As Leslie Greengard, director of its Center for Computational Mathematics, puts it, Flatiron perfectly reflects Jim's unique mix of vision, patience, and drive, making a huge impact in a surprisingly short time. In another bold move, the foundation contributed $90 million to the $110 million Simons Observatory in Chile's Atacama Desert. This observatory is mapping the afterglow of the Big Bang to search for early gravitational waves. Physicist Suzanne Staggs, a board member of the observatory, recalled how Jim and his wife Marilyn inspired an atmosphere of limitless vision with this project. Jim Simons also left a lasting mark on education. He helped establish Math for America, a program aimed at recruiting top math teachers in New York City. He further broke records by donating $500 million to Stony Brook University in 2023, marking the largest unrestricted gift ever given to a U.S. university.
Well,
Jim's story is one not just about making billions of dollars, it's about innovation, philanthropy, and the human endeavor. If there's one speech that really defines Jim's life as a mathematician, billionaire, hedge fund manager, and philanthropist, then it's this.
the short talk is this. I did a lot of math, I made a lot of money, and I gave almost all of it away. That's the story of my life. Now,